Welcome to TradeTheMBI.com. This is John. This report is for the 24th of April. Well, you can see from a daily standpoint, we've had the lowering of the 50% and we're still holding above it. So from an interesting standpoint, that's still positive. We've had a pretty decent fade here of the DOC, meaning long-term buyers in red, midterm buyers in green, coupled with even a fading the steel, and that's not resulted in a huge decline, and that's okay because we haven't seen a dip below the red line. So staying within the extreme histogram here in the green color is relatively bullish. We've noticed also the ATR fading dramatically from we were in the high 50s there, now down into the mid 30s. So things are calming down just a little bit, but we're still stuck within the range. We've had the nice turnaround over, this little revisit. And so I guess, some people call this, you can't call this a double bottom. You're not at the bottom of anything. If we shrink this chart a little bit, you're not at the bottom of anything. That goes way back. So it's a misnomer when you hear that from a technical analysis. But from a description standpoint, what you've done is you've tested these lows again to verify that, hey, you've got a significant number of buyers at that point who want to jump in, and that has led to where we're at with this current breakout. Rising here of the steel, coming back above the sign would be relatively bullish, and at that point you would expect midterm buyer turnaround, and that would be wave 2 within this declining shakeout range. So while it still has a bearish tint to it, this has not been all that ugly. And that's kind of what we expected. As we talked about this, you break out from this little conation setup, pops up a little bit, retraces, and then it begins the leg. And it's just about shaking out weak players. Same thing here with the euro. It's still way elevated for where it should be, particularly with rates in the U.S. Poised to do something. Treasury's still holding on despite that. And there's really no question about you got a record number of states reporting record low unemployment, and that this is only going to potentially cause wage increases. We haven't seen that develop yet, simply because there's been a significant supply of labor that has been untapped. And the fact that you're seeing more jobs getting created and you're not having this major change in labor rates means that there has been a significant amount of slack in the number of people that they thought were available to work. And that's something we talked about quite a while ago. This is going to be the burner of it all. Oil prices and the squeeze higher here, and that's going to be the catalyst. This is the very thing they avoided during from the financial collapse. You had mass influx of labor to reduce wages, and you had a mass flow of opening up the U.S. oil for the first time to help force oil prices lower. But as the economy grows, as I mentioned, you were going to get into constrictions where you only had so much capacity, and particularly in the U.S. where there has been no improvement of refining capacity in that because of environmental laws. That's going to create bottlenecks, and that's not going to get resolved in the next year or so because it takes longer than that to get a lot of those projects online. Even now that the regulations have been cut back, it's going to take a while. And that's put pressure back on gold. Had a little DOC spread that developed right here above the ABM, and then we moved below it, and then it's just cascaded itself lower. So intraday, wow, this was quite the setup. We had the gold back here from the previous day. If you look over here at the left side of the chart, and it was above the 50%, which called for a move towards the highs. Well, that's what we got. We actually opened above the highs. But it led to an immediate weakness right after that, with this orange jumping above the 13.5, and then we ended up with the full DOC spread that it started a little late because we immediately turned around with the reset of the steel and put into little buys, but that's where it began to get a little choppy, wavy, and we had some interesting action going back and forth. And again, we had the gold about 50% here that led move back up to the highs, and then we started talking about some of these short setups and developed a new little class of description, and I'm calling it the snake. And basically, it's effectively this crossover back here where you see the orange going above steel, and you'll either get, in most cases, the cyan coming between. It's sort of like the mouth open here. If you look at the two top color ranges, and you have the tongue of the snake, so to speak, coming out the middle. And as long as it stays in between there, you've got your, particular setup going in the right direction. In this particular case, particularly when it comes to short, it helps to have that red at the zero line or slightly below. The precursor to it was just a little bit earlier, and the interesting thing about that is you need to get a significant enough of a spread, usually where the orange goes above the 7.5 and the steel going the opposite direction below, or if it's inverted, just the opposite, you'll get the bullish side of it. We'll look at that one in a second. And that's like the earliest, and usually you get that into rising shakeout, which that happened all the way over here, just a few bars before normal. So it's worth pointing out. It'll be put together into the program, and it will identify it, because that leads us right over here to the beginning part of the day, where this is the second half of it, where we see this a lot, where you'll end up with steel above, and you get the dip of the orange, and it looks attractive from a buy standpoint. It's like, hey, I got higher shakeout, even the yellow's above magenta, and then invariably it's like it goes up for like the 1 bar and then it fades. And that's because you have to understand the reality of it. The rising orange is actually a bit bearish along with the falling steel, and so it creates a double whammy effect when you get to these peak effects. So the actual buy setup comes when you have orange fading. Oh, I've got an emergency vehicle here. Hold on, let me pause real fast. All right, the emergency vehicle's passed. I don't know if you could hear it or not, but it was quite loud in my ear. But kind of a good precursor in the sense of it's a significant indication, because you'll find this a lot where you'll see this first move comes up and then the flattening, and it's this rejection here on both. And I like to think of it when you see it close up together. I sometimes refer to it the same with the green and the cyan. It's sort of like a mouth opening effect, and in the middle of it right here was the tongue coming out of it. And what that does is it produces the push long, and the longer that steel rises and or the orange fades, the stronger that move is. Now in this particular case, came through, but then we started to see it pop back up along with the falling steel, but at the same time you then had rising green crossing over. And so that gave the slight continuation. And at that point I was like, okay, we've already achieved 6+ points. Took a portion off, and then it was just a matter of following the ABM. And as you can see, the ABM is still going, because right in the middle of it, we converted to the gold here, where the gold started rising on the shakeout, with the rising shakeout and going in the direction of that, started to propel itself. Once it got over, this was right at market closes. Well, whoa, once it gets over the 50%, we're looking for the highs. So not only it hit the highs, but it has exceeded them. And then at that particular point, we also had cyan under red, which is always a long. And that's back, right over here. So right on that breakout, and kind of filled in a little bit. And then what you'll see with this is a continuation, because again, the orange coming up, steel coming down is a little bit bearish, and that's where these were a little weaker, but they're a little weaker within rising red, which kind of overtakes them. So it just lets you know that sometimes you can be confident in buying some of those supports when you see that kind of a setup. Because in this particular case, again, you had the rising steel, falling orange, of course, with cyan under red. That's definitely bullish going through. And then, they try and fool it with the little bar down, but then look at that giant move the opposite direction, consistent with the overall reading. So, it's just going to be part of the program. You're not going to have to look at these kind of situations. It's just going to change color. But I'm just trying to give you a heads up as to why that will change. All of a sudden, you'll see these white candles for the red temporarily, and then blue, it'll shift to the blue for buy, which they're going to eventually just turn to green. And what you'll see is just an MBI candle for a buy signal. And, but it's important that you understand that these are very unique and specific sections within overall market conditions. And that if you try to look at either the DOC and then shake out some of these in just a broad overall context, it just gets lost in a sea of blandness. It's when you have very significant or unique market situations, and this is where I think the Morganacci line is helpful, because there are very specific relationships below 50%, and in particular below the 23%, as well as above, and it makes a difference because the market behaves differently in each of those. So just throwing that out there for consideration, and as always though, I'll keep posting relevant setups as they were happening. This was fun to do this real time. I think we even did this one. It was like right in the middle of the bar. The bar had just begun, but it was clear at that point that this was going to be the second portion of it, because the first part of it is, you know, that meeting point, and then once the pivot began, it's pretty clear, and rarely do they. And it was getting middle end of the bar. I think there was less than 1,000 to 5K left, so it was fairly safe even in the middle of the bar to do that. And then just shot up towards the end of the bar and continued from there. So that was fun to show that, because I mean, in the broad context with the amount of dips going on in the day, it sometimes is difficult to turn around and go the opposite direction and just be like the willow, you know, going with the breeze. And here we can see the breeze shifted. So, as always, trade well. We'll talk again later.